today's video, we're walking through a real car insurance claim breakdown so you can see what insurance actually paid and where people are often surprised. What's up, you guys? My name's Ashley, and this is one of the most misunderstood parts of car insurance. People know they have coverage, but they don't really know what that means until they actually get in an accident. So in this video, you'll learn how a real-world claim is processed, what costs insurance typically cover, what comes out of your pocket, and then how deductibles and coverage limits actually show up in real life. I want to talk about this because understanding this before an accident is just going to help you choose better coverage and avoid stress later on down the line. So let's start off with the basics and talk about what car insurance actually is. So car insurance is a contract that helps pay for costs related to accidents, damage, injuries, or liability. You pay a premium, and in return, the insurance company agrees to cover certain expenses based on the coverages and limits that you selected. Most car insurance policies are made up of several parts. Liability coverage pays for damages or injuries you cause to others. Collision coverage pays for damage to your own car after an accident. Comprehensive coverage pays for non-accident damage like theft, vandalism, or weather-related events. There are also optional coverages like rental reimbursement, roadside assistance, and medical payments. What many people don't realize is that each of these coverages work differently during a claim. Insurance doesn't just pay for everything, it follows very specific rules based on your policy. Now let's walk through a realistic accident scenario so that it feels concrete. Imagine you're driving through an intersection and another car runs a red light and hits you. Your car is damaged and you need repairs. You're shaken up but not seriously injured. The other driver is at fault. This type of accident is very common, and it's a good example because it shows how multiple coverages can come into play. Step number one is determining fault. So the first thing insurance companies look for is fault. Fault determines which insurance company pays and which coverages apply. If the other driver is clearly at fault, their liability insurance is typically responsible for paying for your vehicle repairs and any injuries. If fault is unclear or disputed, your own insurance may step in temporarily while things are sorted out. This is where having collision coverage matters. Even if you're not at fault, collision coverage allows your own insurer to handle repairs upfront and then cover the costs from the other driver's insurers later. Now, let's say the repair estimate for your car comes back at $6,500. If the other driver's insurance accepts fault, their liability coverage should pay the full repair costs as long as it's within their policy limits. In this case, insurance would pay $6,500 and you wouldn't owe a deductible. If instead your insurance handles the claim through collision coverage, your deductible applies. If you have a $500 deductible, insurance would pay $6,000 and you would pay $500 out of pocket. This is one of the first places that people get surprised. Even when you're not at fault, using your own collision coverage usually means paying the deductible up front. You may get reimbursed later, but not always quickly. Now let's look at a slightly different outcome. If the repair cost is close to or higher than the car's value, insurance may declare the vehicle a total loss. Let's say your car's actual cash value is $10,000 and repairs would have cost $8,500. In that case, insurance may decide it makes more sense to total the car. Instead of paying for repairs, insurance would pay the car's value. If this is handled through your collision coverage and you have a $500 deductible, insurance would pay $9,500 and you would pay the deductible, that $500 deductible, or whatever your deductible is. This is where understanding actual cash value matters. Insurance does not pay what you originally paid for the car, it pays what the car is worth at the time of the loss. Many people assume rental cars are automatically covered, and they are not. Rental reimbursement is an optional coverage. If you have it, insurance may pay a daily amount toward a rental car while your vehicle is being repaired. For example, your policy might cover $30 per day up to $900 total. If your rental costs more than that, you pay the difference. If repairs take longer than expected, coverage may run out. If you don't have rental coverage, you pay for the rental entirely out of pocket, even if the accident wasn't your fault. Now, let's talk about medical costs. So depending on your state and your policy, medical expenses may be covered by medical payments, coverage, personal injury protection, or the at-fault driver's liability insurance. For example, if you have medical payments coverage up to $5,000, insurance may pay medical bills related to the accident up to the limit regardless of fault. If injuries are more serious, the at-fault driver's bodily injury liability coverage would come into play. This is where coverage limits matter a lot. If the other driver only has $25,000 in bodily injury coverage, coverage and medical bills exceed that, the remaining cost could be a problem. Now let's talk about what insurance did not pay in this claim. This is where reality can set in because insurance usually does not pay for everything related to an accident. In this scenario, you may still be responsible for your collision deductible, rental car costs above your coverage limit, any medical costs beyond coverage limits, diminished value of your vehicle, lost wages if you miss work. These gaps are why understanding your policy matters more than just knowing that you're insured. Now let's look at how different coverage choices affect what insurance pays. If you have a higher deductible, your monthly premium is lower, but you pay more out of pocket during a claim. If you have higher liability limits, you're better protected if you cause an accident and someone else is injured. If you carry minimal coverage, insurance may technically pay, but the amount may not be enough to fully protect you. This is the trade-off people make without realizing it until something happens. I wanted to touch on Lemonade because it's a really powerful car insurance company. So Lemonade offers car insurance with a digital first approach. That just makes it super easy to see your coverage choices super clearly. You can see your deductibles, limits, and optional coverages up front, which just helps reduce surprises during a claim. Claims are handled through the app and the process is designed to be very, very straightforward. No matter which company you use, the key is understanding what your policy actually covers before you ever need to file a claim. If you want to go ahead and get a quote from Lemonade, we do have a link down in the description below. Next, I want to talk about a comparison tool because a car insurance survey can help you see how different companies price the same coverage. Many people are underinsured simply because they never compared options. They choose a cheap policy without realizing what they gave up. Comparison quotes help you to understand what coverage costs in real terms and whether upgrading limits or adding options actually make sense. So we do have a car insurance survey down in the description below. So once you click that link, you'll go ahead and type in your zip code, how many cars are on the policy, how old you are, if you're currently insured, any at-fault accidents in the last 3 years, if you own your home, and then if you or a family member honorably served in the US military. It'll take you 30 seconds to fill this out, and then once you click submit, you'll get a bunch of different options so you can compare quotes and find the best fit for you. One of the biggest benefits of car insurance is financial protection. In a serious accident, insurance can cover tens of thousands of dollars in damage and medical costs. That protection can prevent a bad situation from becoming a financial disaster. The downside is that insurance is not perfect. Deductibles, limits, and exclusions mean you often still pay something out of pocket. Claims can also take time, and not every situation is as straightforward as people expect. But understanding these realities is going to help you choose better coverage. Before we wrap up, I just wanted to touch on a couple of bonus tips. So one important tip is to actually read your declarations page, not just a summary email. The declarations page shows your deductibles, coverage limits, and optional add-ons in one place. Knowing these numbers before an accident is just going to help you understand what you'll owe and what insurance will cover when a claim happens. Another tip is to choose a deductible that you could realistically pay tomorrow if you had to. Lower deductibles raise your monthly premium, but very high deductibles can be stressful during a real claim. The best deductible is one that balances affordable monthly costs with an amount you can comfortably cover out of pocket. It's also smart to look closely at your liability limits. Minimum limits may keep your policy legal, but they often aren't enough to fully protect you in a serious accident. Increasing liability limits usually doesn't raise premiums as much as people expect, and it can make a big difference if you're ever at fault. And finally, review your coverage at least once a year or after major life changes. Buying a new car, moving, changing how much you drive, or adding a new driver to your policy can all affect what coverage makes sense. Insurance that fits your life a few years ago may not fit now. That's why a tip is to save our survey so you can go ahead and do it once a year, and then find the best coverages with the best prices for you. If you want to avoid surprises during a claim, the best move is understanding your policy and comparing options before something happens. If you prefer a traditional experience, companies like State Farm can really work well. If you want a clean digital experience, Lemonade may be a good fit, and using a car insurance survey can help you see what's available for your situation. The right choice depends on how much risk you want to carry and how predictable you want your costs to be. I know how stressful accidents can be, especially when you're trying to figure out what insurance will actually pay. The goal is to understand this before you ever need to file a claim so you're not learning under pressure. If you want to go ahead and check out Lemonade, State Farm, or use our survey, those links are down in the description below. I do want to mention that these are affiliate links, which means we may earn a small commission at no extra cost to you. So if you do choose to use our links, we just want to thank you so much in advance for supporting our channel. It really helps us to continue to create free content just like this. This channel is dedicated to helping you understand insurance clearly so you can protect yourself without the confusion. Don't forget to like, subscribe, and leave any comments or questions below. We'd love to hear from you. Thank you so much for for watching, and I'll see you in the next video.